Welcome back. You're watching Invest Africa, where we're taking a look at mergers and acquisitions on the continent, the kind of activity we're seeing in that space right now. And still with me on the desk is Peter Steyn. He's director at Worksmans and chairman of Lex Africa. And joining our conversation now from our Zambia bureau as well is Luyamba Mpamba, who's acting director of mergers and monopolies in the Department of Competition and Consumer Protection in Zambia. Welcome to Luyamba. Before we take the conversation to her, I mean, we can talk about growth potential that the African continent boasts, the cost imperative and needing to enhance that, the infrastructural support that needs to be given to business to entice investment this way. But it means very little, Peter, if we don't have a supportive regulatory environment as well. In South Africa, we've had a couple of deals, Kansai Paint vying for free world coatings, even more prominent, the Walmart Massmart transaction, and regulation around competition specifically seeming to be a pretty big stumbling block. Even the Metropolitan and Momentum tie-up have seen competition rules or conditions being attached to it. What's your sense in terms of the kind of message we're sending out there to potential investors?
I think the key thing with regulation is where to draw the line, where to draw the borders. And I think the second key point is that it must be clear and certain. Investors and businessmen, both local and foreign, want certainty. They want to understand what the rules are. Now, you mentioned those South African cases. I'd say the vast majority of mergers which are notified to the South African Competition Commission are approved unconditionally. I mean, there are contentious cases. And, you know, in those cases where the minister exercises rights under the Act or where parties object to the merger, I think the competition process in South Africa is there to give a full ventilation of those issues. If people are aggrieved or have objections to a merger, that they're entitled to come and make their case before an impartial tribunal, and with appeal rights to the appeal court.
At this point, I think it's very important to highlight this. It's not just a South African phenomenon that we're looking at. We've seen it in Canada, we've seen it in Namibia as well. And it seems like this comes about by way of a new economic era as a whole. Countries are simply becoming a lot more protectionist than they've been at the past. So that's important to keep in mind when we're having a conversation like this.
Yes, absolutely. I mean, competition law is a worldwide phenomenon. In fact, it's grown exponentially in the last few years. Many African countries are adopting competition laws, and I think the most significant development this year has been the COMESA Competition Commission coming into operation. COMESA being a regional body of 19 African countries, from Libya and Egypt in the north all the way down to Zambia, Zimbabwe, Malawi, including Swaziland, but excluding Mozambique and Tanzania, which is an interesting.
Luyamba, of course, on the one hand, you have a business looking down this avenue to better market access and increase their competitiveness on a global scale as well. And then you've got governments looking to protect their own citizenry, ensuring that the tie-ups do not, promote anti-competitive behavior. It's a pretty tough balancing act to play. What's your assessment of how right you're getting things over in Zambia?
I think it's been working well. We've been trying to strengthen our competition and regulatory rules and regulations as we've been witnessing a number of mergers and acquisitions coming into Zambia. We have to ensure that the mergers that come into Zambia benefit both the consumers, the people of Zambia and the economy, as well as the competitors that they find in the economy. So we've been working at strengthening the regulatory environment in the country. And as Peter mentioned earlier, the coming in of COMESA, I think that will need a much stronger competition bodies in all the member states if we're going to encourage mergers and acquisitions in this market. COMESA market is still relatively a small market, so I think having a very strong regulatory authority in each member state is what we need right now.
Peter, highlighting that it's all about the clarity of the regulation that's put on the table as well. That's what investors want. That's what secures peace of mind to an extent. What kind of shifts are we seeing in the regulatory regime when it comes to, M&A activity and regulating competition within various industries over in Zambia?
I think we've been witnessing a number of, or an increment rather, in mergers and acquisition in the mining sector, as well as the construction sector. So at this point, where we're looking at transnational mergers, I think it's very important for the merging parties to understand the regulations, the COMESA regulations, and what needs to be done at the time they're merging. Because I think what we've been witnessing as a commission is this lack of clarity in the regulations and what body you go to, whether you come to Zambia, you notify the Competition and Consumer Protection Commission in Zambia, as well as COMESA. So I think that is not really clear to the merging parties out there. So we need to work together as member states in making this very clear for merging parties.
Practically speaking, Peter, how defined a line can you be looking at, can you establish, especially where you've got, in the case of South Africa, your labour unions getting pretty vocal and a lot louder now than they perhaps have been in the past?
I think the line of regulation is obviously drawn by statute first and foremost. And I think, using the COMESA example, I think one of the challenges, the COMESA Commission is intended to be a regional body, a one-stop shop for mergers and acquisitions in the COMESA region, which is a great concept. But I think the tension is between national regulators and COMESA. Some national regulators, the Kenyan regulators, said that you still have to file in Kenya, even though you file in COMESA, which means double filing delays costs. I think those sort of issues need to be dealt with. As far as the line of regulation is concerned, again, clear legislation. Using COMESA again as an example, and I filed the first merger filing with COMESA Commission last month. One of the issues is that the wording is not clear. Strictly speaking, if the target firm, the firm that's being bought, is not in COMESA, in a COMESA country, due to the wording that is unclear in the regulations, you would still, strictly speaking, be obliged to get their approval if the buyer operates in 2 or more COMESA countries, which makes no sense at all.
So there's still a lot of work to be done in terms of fine-tuning the kind of policy we're putting out there in order to entice investors.
Yeah, I think the key thing is, it's a work in progress. A new law comes into focus. There will always be interpretational issues. And I must say I've been heartened by the COMESA Commission's practical approach to some of these issues. And I'm hoping that we get guidelines from them which will help clarify things. Because as I said earlier, it's absolutely critical that any sort of regulation, not just competition, any sort of regulation is clear and the investors understand it. And of course that the fees are not too high, because the COMESA fees can go up to $500,000, and that in itself could be a deal killer on the smaller deals.
Absolutely. Big disinvestment we could well see on the back of those costs that are associated with dealing with companies on the continent. Luyamba, let's take a look at Zambia specifically, because you mentioned that we're getting interest specifically directed towards the mining sector, towards the construction space as well. What kind of incentive is government putting on the table to attract investment its way?
Well, there are a number of incentives that the government is putting across to attract investment into the country. So maybe right now I couldn't stipulate each and every bit of the incentives that the government is putting up, but I think these have been key sectors of the economy that we want to see develop in the country. So the more mergers and acquisitions that occur, maybe in the construction sector, in the agriculture sector, that is a welcome move for the government, because, they have picked up priority sectors that they would want to develop in the next few years.
What's your outlook as far as M&A activity in the country is concerned moving forward?
Moving forward, I think the outlook would have to be an increment in the number of mergers and acquisitions that we're going to receive in the next few years. I think our economy has been growing relatively, and I think that has also been seen from the number of mergers and acquisitions that we have received as a commission. So that's likely to increase.
Well, let's leave it there. Thanks so much, Luyamba, for having joined us this afternoon, and to you, Peter, as well. That's where we leave it for this edition of Invest Africa. Big thanks to my guests, Peter Steyn and Ernst Cheriot, of course, who joined us in the first half from Kenya, Luyamba Mpamba as well. Until next week, from me, Alicia Second, it's goodbye.